The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and thank you for joining us for today's webinar on impact of economic substance regulations in the UAE. ESR is introduced to ensure that entities that are doing business in the UAE, according to trade license obtained from authorities or the licensees, meet the economic substance test. Pertinently, upon the introduction of the said regulations, the European Union has removed UAE from its blacklist, that is, EU list of non-cooperative jurisdiction for tax purposes. In today's webinar, we will discuss and critically evaluate the impact of the regulations on businesses in various sectors and decode the several key terms presented in the regulations. Before we begin, please note that all our listeners are in listen-only mode. If you have any questions, please share them with us through the question box on the right-hand side of your computer screen, and we will address your queries at the end of the webinar. We are happy to host today's webinars for all our listeners. Without any further delay, we shall start. Over to you, Lokesh.
Thank you, Jugal. Thank you for the wonderful introduction. And yes, we are here today, all of us, to discuss and deliberate on the economic substance regulations, which were introduced early 2019. And since then, there have been a lot of developments that have happened and a lot of guidances that have come from ministry side. So like you rightly mentioned, Jugal, the objective of today's webinar is to take you through what the regulation is about and how the businesses are impacted. More particularly, what are the compliances that are triggered, and how and what measures can be adopted to meet those compliances. Since most of the compliances have come with penal requirements, and in case the businesses are not doing or not compliant with the ESR, they might have to face some sanctions as well. Therefore, it is a very important topic, and I would be happy to begin the topic. And let me
Just on full screen, Lokesh, that's it. Yeah, we can see you. Thanks.
right.
Yep.
Perfect. Thank you. Thanks, Jugal. All right. Uh, so here is what we're willing to discuss today. Bit of a background, and then who is covered under the ESR, what are the relevant activities, what is it really meant by economic substance test, what is it that the business needs to do to meet those economic substance tests, and like I mentioned, more importantly, what are the compliance requirements under the regulations for each and every businesses, and if not met, what are the administrative penalties. All right. So, if I may just begin with a little bit of a background as to why these regulations were introduced in the UAE and what really led to UAE enacting a regulation of this kind, which insists upon businesses to demonstrate that they are meeting the substance test. So UAE, as most of you might be aware, is a part of an inclusive framework. An inclusive framework, which in OECD inclusive framework, which has more than 130 nations today, and they are all abided, or they have all committed to implement the minimum standards that have been laid out in the base erosion and profit shifting uh, project, one of the most landmark project of the OECD. So UAE, being a member of the inclusive framework, it had already committed by being a member, and therefore it was important that it introduces all those minimum standards that are there in the BEPS project, and all that needs to be done to increase the tax related transparency. And as such, that is something which the BEPS really thrusts upon. It thrusts upon more and more tax related transparency, right? And also, there was an assessment done by the by the European Union about the tax framework of the UAE, and in a way, you know, considering that assessment, it had blacklisted the UAE, calling it a non-cooperative tax jurisdiction. So in order to respond to that, this is one of the most significant steps that the UAE has taken in introducing a economic substance regulation. And immediately after that, we saw that UAE was removed from the European Union backlist. So this was one of the key steps taken in order to remove UAE from the blacklist of the European Union. So this was a bit of a background. If I may take you to what has really happened since the introduction of the regulation. So like I mentioned, early in the 2019, around 30th April, the Cabinet of Ministers came out with a resolution, which resolution gave in detail what the ESR objectives are and what the regulation is about, what are the compliance requirements, and also what are the administrative penalties. So this was in principle a document which introduced as such the economic substance regulation into the UAE. And around 4th of September, some more guidances have come, and similarly around 11th of September some more guidances had come, which basically, if I may share, that basically clarified the coverage of the regulation. And to say that, it is the licensee does not mean only the licenses given for the businesses, but even something called as a certificate of incorporation can also be termed as a license, and therefore all those who are holding a valid certificate of incorporation are also covered under the economic substance regulation. Early this year, around January 2020, the most important document or the most important initiative of the ministry was to release a frequently asked questions. And I must say that it was very detailed, and it has talked about almost each of the relevant activity that is forming core of this entire regulation. And it has gone to the extent of talking about exemptions, talking about what actually measures needs to be taken by the companies or the businesses in order to meet the substance test. What is still further expected is, as of now, we haven't received a form or the manner in which the notification or the ESR report needs to be furnished. Most likely that it will be an electronic filing. However, till date, we have not received, or the ministry is yet to release a format of the notification or the format and the manner of filing of the economic substance report, the detailed report which needs to be filed. All right. So apart from UAE, which are the other nations which have a similar economic substance test regulations? So, as you may see on the screen, there are countries like Cayman Island, Bahamas, Bermudas, BVI, Isle of Man, Seychelles, Mauritius. And if I may say, most of these countries, if you follow, they all have nil rate of taxation. When I say taxation, the direct tax or the income tax. And therefore, all these countries have introduced a regulation in the similar manner, which is Cayman Island, Seychelles, Mauritius, Bahrain, etc. Now, owing to the current scenario, the lockdown situation or the COVID-19 situation, which the world is right now coping with, most of these countries have relaxed or extended the timeline. Like, for example, Bahrain and Cayman Island have extended it to 30th June. Similarly, Bermuda, Jersey, and Guernsey, they have also extended and announced a relaxation for the ESR related test. And if I may share, even DIFC and ADGM authorities here, which have previously come out with a timeline to furnish a notification by 31st March, have relaxed the timeline, and which are very obvious considering the current situation. So that takes us to a next question, as in who is covered. And in my assessment and in my reading of the regulation, what I understand is almost every business that holds a license, and when I say license, even certificate of incorporation included, uh, is getting covered by the regulation. Even there was a question whether the branch of a company which is incorporated outside, but if the branch is located in UAE, whether the branch can be covered. The answer is yes. The regulation intends to cover even the branch which holds a license to do a business in UAE. Exemption category is very specific or very limited to only those entities which are 51% or more owned by the UAE government. So the government undertaking or the government holding companies are as such exempted. Although what I understand is even for those entities which are controlled more than 51% still need to do a notification compliance, and they are not as such completely exempted. Although they may not be required to file a detailed economic substance report, but they still need to do a notification, right? And needless to say that if the licensee is not carrying out any of the relevant activity, which as such is a is at the heart of the entire regulation. So if you're not performing those relevant activities, you're not governed by the regulation, and as such you are exempted. All right, that takes us to a most important question: what is a relevant activity? So a relevant activity, if you may look at the list, again, it's a very comprehensive list, and I feel that everything, almost every kind of businesses are getting covered, which are possible, which are potentially having a ability to generate any income in UAE. So almost call it entities like holding company operation, or entities like a headquarter related operations, from shipping to distribution to fund management, or any providing of credit facility. All those kind of activities are getting covered. And as the regulation name itself suggests, the emphasis is more on the substance. So it is the substance which the regulation is insisting upon demonstration by the businesses. So substance is more important over the form for each of these activities, right? We have covered a few relevant activities which are more commonly discussed since the time the regulations were introduced, and which have some or the other questions from the, in our experience, from the businesses side, and therefore we have covered only the few relevant activities. For example, the insurance business. Now for the insurance business, there is a very limited guidance in the regulation itself. However, what the regulation says in principle, the insurance business definition, business coverage, you have to go back to a federal law that governs the insurance business. And therefore, if I look at a federal law, the federal law covers or defines insurance business as even the activities such as insurance brokers, or performing actuarial valuation, or all those who are being insurance agents, their businesses or their activities are also getting covered as an insurance business. So therefore, insurance business, although finds a very limited guidance from the regulation, but if you look at the main law or the federal law, it has defined insurance business in a very comprehensive manner, and that includes everything, even the agency related activities. Another important relevant activity which is becoming more contentious, considering that UAE is also a source of finance for most of the businesses. So most of the queries that we handled in last 5-6 months, they were all around the lease finance business or the lease finance relevant activity, whether their activities can fall in the lease finance business related relevant activity as per the regulations. So what is lease finance as such? If you look at the regulation, it, from the title, it looks as if it is only a leasing activity. But if you read the regulation and if you read the FAQs as well, it is slightly beyond just the leasing function. It also covers providing of credit facilities. So providing of credit facility is a very broad term, which would include any kind of a financial arrangement, for example, giving of loan, giving of guarantee, etc., etc., right? And anything that has a consideration attached to it is, or has a potential of falling in the category of lease finance business. So consideration is more important. We have covered a couple of case studies to demonstrate why consideration is so much important. Now, what can be a consideration for a credit facility? It could be in the form of an interest, it could be in the form of a fee, it could be a rental payment or a capital gain. So any consideration. Now, consideration as such does not find its meaning or the definition in the regulation, but in the common parlance, consideration could be or is potentially a very, very wider term. And therefore, one has to be very careful in deciding whether the consideration exists or does not exist. And that would depend upon the analysis or the actual uh, uh, form of the transaction. Apart from lease finance business, let's say a distribution and service center business. Distribution and service center business, although it has been merged in one title, however, both distribution and service center business are two different activities, whereas the distribution activity is defined to mean where the imports are happening into the UAE and which again gets re-exported from the UAE, and only the UAE entity only performs the distribution function. Those activities are getting categorized or falling in the distribution section. And for the service center business, it is majorly the back office function, which would be happening from the UAE, and those kind of businesses are getting covered in the service business. We have tried to cover each of these relevant activity in the form of a case study also, and I hope that uh, kind of helps in understanding more as to what the regulation is intending by defining these activities. So let's take a look at the first case study, which talks about a distribution and a service center business. So like I said, a distribution business would be a company in UAE, let's say importing some cosmetic products from a parent company in France, and it is distributing to a, let's say, a third party in Singapore. So let's say it imports in $100 and exports to Singapore entity in $150. Here, the first question is whether ABC UAE, a subsidiary company, whether it is covered by the regulation. The answer is yes, since it clearly falls in the definition of distribution and service center business activity. So it is performing a relevant activity which is defined under the regulation, and therefore it is covered. Now, having known that it is covered under the regulation, what is it that it's supposed to do? So the first and primary task of the UAE entity would be to substantiate or to justify uh, that it has a capacity to earn 50% margin. And how would they demonstrate? That is by showing what functions, what critical functions that the entity is performing, and which is capable of commanding a 50% margin on a product which was imported from a parent company. Similarly, if we read the regulations in a more finer manner, it also talks about whether the UAE entity has adequate employees or has adequate skill set, not just the employees and not just the headcount, and whether those skill sets are capable of generating so much of revenue. So therefore, on both the parameters, not only the functions, but also whether the employees are skillful enough or capable enough of generating 50% margin, and therefore to justify that it is performing a, or it has a substance, the UAE entity has a substance and it is performing a key function from the UAE entity. One of the questions that arisen, or that typically businesses are asking these days, is whether in the distribution arrangement, a high seas sales kind of an arrangement will get covered. Is it okay if the goods are not imported into UAE? The answer is importing the goods into the UAE is a must. And if it is not imported into the UAE, then as such, it will not fall in the distribution function or the distribution relevant activity. So the physical import has to happen in UAE. Other question was whether goods sold in UAE would also be covered as such for the purpose of regulation. Now here, the FAQs have made it very clear that if goods are imported into UAE and distributed further only within UAE and not exported, then a distribution within UAE will not get covered under the distribution function. Now that appears to be very logical, because idea as such is to identify and monitor those who are booking more than the required number of profit for a simple activity of a distribution. And therefore, as long as the goods are not moving out of the UAE, if it remains in the UAE, then those are as such exempted from the economic substance regulations. Right. So that was distribution. Now, what could be a service center business? So if I look at a case study that is there on the screen, uh, a service center business, like I previously mentioned, is it's mainly to capture those kind of arrangements which have a back office operations. So let's say, for example, you have a parent entity in India which does a software development or which is a software development or a software and IT service provider headquartered in India. It has a subsidiary in UAE, and from a subsidiary in UAE, it is also rendering services to, let's say, a third party company in South Africa. And the South Africa business is completely managed by the UAE subsidiary. Now, what the regulations is saying is all those back office operations. Let's say, for example, in this case, if it was a call center, then if the UAE entity is performing the call center business for the parent entity in India, then whether the customer is located outside UAE and the customer's clients are also located outside of UAE. Those two conditions are a must. So the emphasis is on, again, businesses or the revenue which is generated by the UAE from outside of the UAE, and the fact that the outside person has to be a connected person. So therefore, in this case, if we see XYZ South Africa, XYZ South Africa is a third party, and as such, it is not a foreign connected person for ABC UAE. If it is not a connected person, the first question that we have to ask is whether this is covered under the regulation, and the answer is no. So for the UAE's activity to fall in the definition of service center business, the South African entity has to be a connected person or a related party. So therefore, the first question, whether the business is covered under the ESR, the answer is no. What if XYZ South Africa was a connected person? Will the regulations apply in that case? The answer is definitely yes. Now, how to meet the substance test if the regulations are applicable? The substance test, as I said, there are three broad parameters. One is to show that it is directed and managed within UAE. It has adequate employees. It has all the capabilities of performing all the key functions that are required to generate that much of revenue. We'll come to a substance requirement in the subsequent slide. All right. Another important business or business chunk within the UAE is that of providing finances. So this is again the most commonly asked questions by most of the businesses in UAE. Now, whether providing interest-free loan to an entity which is outside of the UAE, whether that can fall or that can get covered as a relevant activity under the economic substance regulation. Like I mentioned in my previous slide, the regulations does cover providing of credit facilities. So if I look at the instant case, the parent entity in UAE is providing a loan which is equivalent to providing a credit facility to a subsidiary in India. So it is definitely meeting the criteria of providing a credit facility. However, what the regulation insists is there has to be a consideration, some kind of a consideration attached to a relevant activity. And in the absence of any consideration, as such, providing of loan will not qualify or will not fall in the definition of lease finance, and therefore will not be covered by the economic substance regulations. So questions like whether the activity is covered under the ESR, if there is no consideration, the FAQ has clarified very clearly saying that if there is no consideration, it is not covered. Which activities performed would be covered under the ESR? Activities like providing of credit facility and providing of interest-free loan is definitely a credit facility. So as such it is. However, because there is no consideration, it is falling outside. What if PQR UAE had charged any other consideration for the loan? Will the activity get covered under the regulation? The answer is yes. Any other consideration, for example, charging of fee, loan fee, or any other consideration in lieu of providing a interest-free loan. If it is flowing to UAE entity, then this provision of interest-free loan will also get covered in the definition of lease finance. Right. The other two more commonly or frequently asked questions are about headquarter business and a holding company business. Now, what does headquarter business refer to? Immediately, the question that comes to our mind is whether headquarter business meaning it will be ultimate parent entity, a parent entity which is headquartered in UAE. However, the regulation has clarified that headquarter does not mean the ultimate parent entity or the shareholding. So headquarter would in substance mean an operation or an activity where the senior management personnel are sitting in UAE and performing or taking all the critical decisions, for example, taking management decisions, coordination of group activities, etc. So it is the presence of key managerial personnel which will define or which will decide whether the UAE entity is performing headquarter business or not. Other important point is headquarter business relevant activity will apply only for the revenue or the activities that are performed on behalf of the related party. So third party as such, as the name only suggests, will not get covered. And like I said, corporate structure are not relevant. It is not necessary that the entity in Dubai is a parent entity for it to fall in the definition of headquarter business. Similarly, connected activity is a holding company business. Now, holding company is, as the name itself suggests, it by the ownership structure, it has to be a holding company, and holding company which generates income only through, let's say, dividend or a capital gain. And if the company is generating any other income apart from dividend or a capital gain, it may not or it will not fall in the definition of holding company business. And that other income, which is apart from dividend and capital gain, will have to be looked at from the other relevant activities perspective and seen whether it is falling in any of the other relevant activities. One good thing about holding company business is if you are falling, if the business of the UAE entity is falling in this particular category, then it is only supposed to do a very minimal economic substance requirement. So as such, there were three broad pillars to meet the economic substance test, of which only two of them applies to holding company business, right? So which are the other two, we'll come to know in the subsequent slide. Now, here we've tried to explain in the form of a case study what could a holding company possibly be like. So, for example, if let's say there is a entity in UAE, which is a parent entity, it has a subsidiary again in UAE within 100% subsidiary. Then it has a subsidiary in India. It also has a subsidiary in Singapore. This is typically a holding company structure. The questions are which activities would be covered under the holding company business. Now, as long as the ABC UAE is not performing any commercial activity and generating its income only from capital gains and dividend, it will be categorized as a holding company. Now, what if ABC UAE carries out any other commercial activity in addition to the holding equity interest? Now, any other commercial activity apart from the holding company business would mean that this company will not be falling in the definition of holding company, but that the other activity has to be again looked at from the other relevant activities perspective and whether it is falling in any one of those categories. One very important question with respect to the holding company is what if the ABC UAE has earned interest income? Let's say, the regulation says that ABC UAE should derive income only from capital gain and dividend. All right, I have a ABC UAE which is only deriving income from dividend and the capital gain. But with all those income, let's say if it parks that income into a bank, into a deposit, and it earns any interest income on that dividend and capital gain money which was placed with the bank. Now, whether the interest income generated by those investments or by those deposits, that will also get categorized in the income of the holding company. Now, whether the interest income which was recorded by the holding company, whether that would also qualify, whether the ABC UAE will still qualify to be a holding company, that still remains a question. I think it will have to be looked at from the quantum, etc., to determine or to conclude whether the ABC UAE will still qualify uh, for the holding company relevant activity only, or whether it has to be looked at from a different perspective. Right? We mentioned headquarter business. So here is a typical case where you have a group headquarter in USA, but you have another senior management personnel sitting in UAE. The UAE entity is 100% held by USA, but the UAE entity is taking care of all the key decisions of entities in Singapore, in South Africa, and in India. This is a typical regional headquarters structure where UAE entity houses or employs all the key managerial personnel for these three entities. This is a typical headquarter business function which the UAE entity is performing. What activities performed would be covered under the ambit of headquarter business. Now, all these are typical. Taking key decisions, incurs, operating expenses are the activities which are considered to be a headquarter function. Does entity need to be ultimate parent entity? No. Even in this case, UAE entity is not a ultimate parent entity. Ultimate parent entity is USA, and therefore, even if it is not ultimate parent entity, it will still qualify as performing a headquarter function. Is location of key managerial personnel important? Yes, very important. What if the entity is taking key decisions for another UAE group entity? If it is taking key decisions for the other UAE group entity, it will still qualify as a headquarter entity. Can an entity be considered as engaged in headquarter business in addition to carrying on any other relevant activity? Well, if you are performing a headquarter business, then it is very difficult to categorize that entity into any other relevant activity. Another important source of revenue which the regulation has identified is revenue from the intellectual property business. Now, we all know how what are the challenges that are associated with the intellectual property. Intellectual property rights as such are very, very difficult to value, and it is very difficult to even justify or prove the arm's length nature of the intellectual property revenue. And knowing the intellectual property related transaction, it generally happens between the connected persons or the related party, and therefore it becomes very, very challenging to benchmark or to justify that the intellectual property related revenue are meeting the arm's length test. The regulation also talks about what can be considered as a high risk intellectual property business. It typically tries to identify those businesses that are only holding the IP, and as such they were not directly involved in development of the IP. And if they were not directly involved, and if it does not have a capacity to develop, enhance, or monitor those intellectual property, then those entities are categorized, or those activities are categorized as a high risk IP business. And for high risk business, high risk IP businesses which are performing these activities, there are enhanced economic substance test requirements that have been prescribed by the regulation. So all those businesses which are falling in high risk IP business or deriving revenue from the IP related uh, transactions have to be little extra careful as such, because the substance test or the substance requirements are slightly more stringent or enhanced. All right. Having discussed all this, now the question comes, what is a economic substance test? So as I mentioned, there are broadly three pillars into which the economic substance test can be justified or can be demonstrated. One is the entity should be capable, it should have a capacity to perform all the key functions. And herein, it is very important to note that for each of the relevant activities that we discussed in the previous slide, the regulation has defined certain core income generating activities. And it has been specified that if you are falling in a relevant category or a relevant activity, then you have to perform those core income generating activities within UAE, and only then you will be meeting the economic substance test. So it is very important that to meet the economic substance test, you demonstrate that you are performing a key function, or you are performing all those core income generating activities within UAE. Similarly, the second most important pillar is you have to demonstrate that you are directed and managed within the UAE. So how do you demonstrate that you are directed and managed within the UAE is by holding the board meeting. The frequency of board meeting should be more common, then the quorum should be physically present, minutes, etc. should be maintained. So these are all guidelines that are given within the regulation only, which say that if you're doing all of this, then you can be said to be directed and managed within UAE. The other important pillar, and this I feel is the most important pillar, especially if you're having any service related business, and that is employee. You got to, it is not only the head count or the number of employees, but also the skill set of the employees, which the regulation talks about and insists that you got to have a relevant skill set of those employees in order to demonstrate or in order to justify that the substance is there within the UAE entity. Right? For all those other than the service related business, you have to of course demonstrate that the physical assets, the machineries, etc., which are required for doing the relevant activity are present within the UAE. Now, this is a more common question that has come up, and this was also clarified by the regulation, as in whether the outsourcing arrangements which most of the companies would be having, whether the outsourcing arrangements can be considered or can be helping the businesses in qualifying that they are performing the core income generating activities. The regulation is quite clear, saying that even if you are performing a core income generating activities or those specified activities for each of the activity through an outsourced agent, you are still, or you can still be said to be meeting the economic substance test. So you might as well have a third party service provider or a related company who is performing all critical functions for you, and yet since these were outsourced only, but as such if you are monitoring and adequately supervising the activity of the outsourced party, then you can still be set to meeting the economic substance test. So one case study on outsourcing activity, a typical example, let's say a company in UAE has another third party called as PQR UAE, and PQR UAE is somebody who does all the software development related activities or the key function that is required for which the ABC UAE is generating revenue. And that was qualifying as the core income generating activity for ABC UAE. The question arises whether if the core income generating activity is outsourced to a third party, can ABC UAE be still be set to meeting the substance test? And the answer is yes. So the outsourcing arrangement has been recognized by the regulation and it can be used to justify the economic substance test. All right. That takes us to a most important question. What are the compliance requirements? What if you are performing any of the relevant activity that we discussed just now? And what if you are falling or your business is getting covered by the economic substance regulation? What is it that you're supposed to do? So the first compliance requirement is to notify. Who's supposed to notify? Like I said, the regulations are fairly broad. So every entity that holds a license and carries out a relevant activity, it has to file a notification. As such, the regulation has also prescribed what needs to go in the form of a notification, and these are very bare minimum details because this is only a notification. So it talks about only whether or not the licensee is carrying out relevant activity, what is the financial year that the businesses are subject to, and also whether the income is getting taxed anywhere outside of the UAE. These are the bare minimum details that are required to be filled up. The timelines, as such, DIFC and ADGM had prescribed a timeline of 31st March, but they have been pushed already, and there is no fresh timeline or fresh date as to by when the notification needs to be filed. However, notification is a mandatory compliance requirement as per the regulation, so it is only a matter of time. as to when fresh dates will come. The manner of the filing of notification is not yet prescribed. So for example, whether it should be filed electronically, physically, and also the form is yet to come from the ministry side. The most important compliance requirement within the economic substance regulation is a detailed economic substance report. Now, this is a report which will talk about, or which will, in black and white, so to say, demonstrate that the substance requirement that have been laid down by the regulation is met by the businesses. So this report is fairly detailed. And for example, who is supposed to file it? Everybody, anybody who holds the license and is performing the relevant activity is supposed to prepare this report. What needs to go is type of relevant activity, amount, etc., location of place of business, number of full-time employees with qualification. Now these are very critical information, because these are the information which will go in defining or deciding whether the economic substance test is being passed or not passed. In the similar manner, if there are any additional details with respect to intellectual property, like I mentioned, the entities which are deriving income from IP related assets or IP related transactions, they have to do additional substance test, and they have to demonstrate that those relevant activities or the relevant core income generated activities are all performed in the UAE itself. Timeline for this is 12 months from the end of the financial year. So let's say for the first year of applicability, which is year 2019, the for filing the detailed ESR report will be December 2020. And similar to notification, the manner of filing the ESR report has not yet been prescribed. So this is the flowchart which was also provided by the ministry, and it fairly classifies or fairly clarifies as to who is supposed to file a notification and who is governed by the regulation. So does the licensee have a trade permit license? If you have it, and if you are performing a relevant activity, you have to do a notification. Now, one important aspect that has been clarified in this flowchart is whether those entities which are owned 51% or more by the government, whether, although they are exempt from the regulation, are they supposed to file a notification? The flowchart clarifies that yes, they are supposed to file the notification. However, they're not covered as such by the regulation, so they need not file the detailed annual report, right? So if you are performing a relevant activity and if you're generating any income from the relevant activity, you have to file a detailed report by end of the year, which is 31st December. So considering the importance or the objective with which these regulations have been introduced, it was very obvious that the penalties would be very stringent. And as can be seen from this slide, the penalties are for not providing or providing any incorrect information. The penalties ranges from almost 10,000 to 50,000 AED. And similarly, for if you fail to meet the economic substance test, then the first year penalty could be between 10,000 to 50,000. However, in the subsequent year, the penalty could be as high as 1 lakh to 3 lakh AEDs, which is a very, very stringent penalty in my view. And that really highlights the kind of importance that the ministry has assigned to this economic substance regulations. These are some of the important FAQs that were also covered in the previous slides, and nonetheless, these FAQs are there in the public domain also. For example, the economic substance regulations, what is the first reportable year? Like I mentioned, 2019 is the first reportable year. Similarly, what is the scope? Do the regulation apply to UAE entities that are part of the foreign multinational group or that are owned by a foreign shareholder? No. So as such, the regulations apply to all UAE entities which undertake a relevant activity. Do the activities listed on the commercial license determine whether a licensee undertakes relevant activity? No. Substance over form approach to be used. Substance is more important. What if a licensee does not undertake a relevant activity during a financial year period, not performing a relevant activity, then as such you are not covered in the regulation. and even the notification is not required. Right? Similarly, what if you are undertaking a relevant activity but you're not deriving any income? So if you're not deriving any income but you are performing a relevant activity, all that you need to do is furnish a notification, and the detailed report, since you've not generated any income, the detailed report need not be furnished by you. How to demonstrate? Well, having seen those three pillars, that what are the criteria to fulfill the economic substance test. So will economic substance be assessed on a license by license basis? The answer is yes. If you're a group with multiple entities, the question was on an aggregate basis, can you demonstrate the economic substance test? The answer is no. Aggregation is not allowed. You have to prove it by license by license. Do employees who perform this core income generating activities need to be present in the UAE? The FAQs clarify yes. So employees in principle need to be resident. Non-resident employee would be counted only if the individual is physically present while undertaking the activity, and licensee bears the cost of the non-resident. Salary, etc., should be recorded in the financials. Do the directors of the licensee need to be resident in the UAE? The answer is no. Only need to be physically present in the UAE to attend the relevant board meetings. What can licensee outsource? Licensee can outsource employees, physical assets. However, conditions such as director and management managed, more obviously, they can't be outsourced. Another important activity that can be associated with UAE is investment management activity. Now, there were many questions around what can fall as an investment fund management business. So, for example, whether the simple investment advisory services being performed by an entity sitting in UAE, where they can fall uh, 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 the investment. Possibly, I think in the it has been clarified advisory services will not qualify to be investment fund management business. However, there are larger questions such as whether uh, function with respect to portfolio management, etc., which is a non-risk-free investment management services, will they will also qualify to be investment fund services. I think those should be analyzed in more detail as regard to the guidance available. Well, with that, I come to my slide way forward, and as I said, the economic substance test or the economic substance requirement is very highly subjective area, and business is likely to face some challenges. It will require some judgment as such, a professional judgment. Uh, and the most critical part, I believe, for the businesses would be to have adequate documentation or adequate documentation trail which justifies that all those criteria that are listed to meet the substance test are documented in the form of a documentation. So therefore, your ESR report in my view will be very robust and very detailed. The substance test has been met. With that, I would like to end my presentation. And if there are any questions, I would be very happy to take.
Thank you, Lokesh.
Yeah, Jugal.
Invite all of you
Simple
to type
questions.
questions in the chat box in the webinar panel for Lokesh to answer. All right, we have a couple of questions, Lokesh. I'm going to read them out to you. The first question that we have says, is a representative office required to comply with the ESR? I'm sorry, Lokesh, are you there? Can you hear me? I'm sorry, we're having some technical difficulty with Lokesh's connection. Just give me one moment, please.
Just like you.
Lokesh, I'm sorry, but we cannot hear you.
Hello?
Yeah. Hi, Lokesh. Are you able to, can you hear me?
Yeah, I can hear you.
We're really sorry, but we're having some technical difficulty with Lokesh's connection. He is connected, but we are unable to hear him. We'll just wait for a minute in case if he is able to resolve that issue. Otherwise, we'll definitely take up your answers offline and get back to you with our queries. Please bear with us for one more minute. If Lokesh is not able to join, then we will end the webinar. We are really sorry for the inconvenience. Thank you for your patience.
Are you able to hear me? That's good. Okay. Okay.
We once again regret the inconvenience to all our listeners. We're extremely sorry, but due to some technical difficulty, Lokesh is not able to re-log in. We thank all of you on behalf of Nexdigm for taking out the time to join us for this particular webinar. We thank you, Lokesh, for taking out the time to share your valuable insights with the people who joined us today. We hope that the insights shared by Lokesh have been very useful for all of our listeners. We will definitely get back to you with responses to the questions that you have put up in the questions box today. So you will hear from us shortly on that front. Thank you once again, everyone, for joining in, and we look forward to having you with us at our next webinar. Thank you and stay safe.